Okay, let's talk about something that seems pretty mysterious for most people, the stock market. You know that thing where people make a bunch of money or sometimes lose it and it's all over the news? Ever wondered how exactly it works? Or why stock prices seem to change faster than your mood when you check your bank account? Well, today we're breaking it down. Don't worry, it's not as complicated as it sounds. Alright, imagine the stock market is like a giant marketplace, but instead of buying fruits and veggies, you're buying tiny pieces of a company. These tiny pieces, they're called stocks. Let's say you love an apple farm, because who doesn't, right? The owner of the farm decides to sell you a part of the farm. Just a little piece though. By buying this piece, you're technically a part owner. If the farm grows more apples, makes more money, and becomes super popular, your piece gets more valuable. And that, my friend, is how stocks work. So each stock is like a little slice of a business. When that business does well, the stock price goes up. When it doesn't, you can pretty much guess what happens to your piece of the farm. And here's where it gets fun. Stocks don't just sit there. The prices of these stocks change constantly. It's like everyone at the market is bidding on your apple. If more people want it, the price goes up. If no one's interested, you guessed it, the price drops. Now you might be thinking, okay, that's cute, but why should I care about any of this? Well, let me hit you with some real-life implications. First off, investing in stocks can be a way to grow your money over time. If you buy stocks in companies that do well, you could see some serious returns. But there's a catch. It's not a guaranteed win. The stock market is like that one friend who can be wildly unpredictable. Sometimes they're the life of the party. Sometimes they're the ones spilling drinks everywhere. You get the idea. Here's why it matters even more. If you're working on saving for retirement, college, or just hoping to buy that fancy coffee machine without guilt, stocks can help. They've historically done better than a savings account. So many people put their money into the market. But remember, it's a long game, not a quick fix. Let's take a real-world example. Remember the 2008 financial crisis? Yeah, it wasn't pretty. Stock prices plummeted faster than I can finish a pizza. Companies like Lehman Brothers went bankrupt and people lost a ton of money. Why? Because people got too greedy, they made bad investments, and that led to a domino effect. This shows you the risk in the stock market. On the flip side, think of companies like Apple. Back in the 90s, it was just another tech company. Nothing super exciting. But as they started making innovative products like the iPhone, their stock went through the roof. Investors who believed in them early on made a fortune. That's the kind of magic the stock market can offer, if you play your cards right. Alright, here's the big takeaway. The stock market is where people buy and sell pieces of companies, called stocks. These prices go up when companies do well, and down when they don't. It's important because it can help you grow your wealth, but it also comes with risk. So it's not a get-rich-quick scheme. So, before you go out and buy up every stock you can find, remember, take your time, do your research, and maybe start small. The market's not going anywhere, and neither are those stocks. Got it? Good. Now, go forth and conquer, or at least don't panic when your stock drops 10%. If you enjoyed this breakdown of the stock market, give us a thumbs up and hit that subscribe button. And hey, if you've got any burning questions or want to share your own stock market stories, the good, the bad, and the hilarious, drop a comment below. We love hearing from you. Until next time, keep your investments smart and your coffee strong.